Hi, I'm George Pino. I'm the CEO of Commercial Brokers International, and today I'd like to talk about the market conditions for commercial real estate within the Los Angeles submarket and what we can expect going into the fourth quarter of 2016. Office vacancy rates for the third quarter of this past year, actually, we saw a little bit of an increase on the west side. It went from 9.1% roughly to about 10.5%. I see this trend as actually probably continuing within the fourth quarter with a slight increase in vacancy rates, but really more of a stabilization, especially coming into the holidays. You know, what's interesting on the vacancy rates also is that we've seen a little bit of an increase in the subleases. And that's actually not just with an increase in the subleases, we're also seeing a little decrease in the sublease rate prices for rents. Direct lease rents in the West Los Angeles submarket for offices, we've actually seen a little bit of an increase in that as well, with an average of just slight increase going from 425 to 435 a square foot on the asking rate. I don't see this changing over the next quarter. In fact, I see it stabilizing a little bit more so, especially with the subleases that are coming on board. There's been a little bit more of competition from subleases that have come on the market. And with that also, you've seen a decrease actually in the sublease rental rate. Los Angeles has always been a desirable market for investors. And in fact, this first half of the year, the office investments, we were leading the nation, second in the nation for the most sales above $25 million. I don't see this changing in the second quarter or second half of the year and going into the fourth quarter, as demand is still very strong and interest within the Los Angeles submarket for investments is increasing. Creative office as a submarket of the general office has always been a strong demand market within the Los Angeles sector, especially West Los Angeles, where there's a lot of creative office space. What we have seen, however, is that earlier this year, in the first half of the year, we had about a 5% vacancy rate across the board for creative office space. And currently going into the fourth quarter, we're almost at an 8% rate. I think this is probably due to the fact that the creative office space has really grown as far as the price increases, and we've seen some pretty large price increases across the board from last year to this year, over 10%. You know, one submarket in the Los Angeles office space that has actually fairly weak compared to everything else is the LAX submarket, where the vacancy rates are extremely high. There's been a lot of talk recently about converting those into creative office space to try and attract the overflow from the Westchester, Playa Vista, and Culver City and Venice submarkets. We haven't seen much happen right now as of the development, but there is talk about that going on. I think that would to repurpose those office buildings is definitely something that is of interest and to keep an eye on for the future and see how they actually do that. I think what they do need to take into consideration, however, is the traffic congestion along Century Boulevard with the construction in the airport and how they're going to work around that. Demand for retail properties as an investment is pretty high right now, and especially I think this is due to the fact that the vacancy rates are pretty low. We're actually about a 3.5, just under 3.5% across the board. What my concern is that we're seeing a lot of increases in the rental rates. I would actually start looking at other secondary markets perhaps as far as retail investments where there's some value opportunities to be added into it, as opposed to some of the prime neighborhoods where I think the rents are already at where they should be or even higher than what could be sustainable. Many of the shopping centers, and specifically the major malls within the Los Angeles submarket, have either been renovated recently or currently have plans for renovation or under renovation. I think this is a factor of trying to attract a different tenant base and client base into those areas. I do believe that this will revitalize the shopping within those centers themselves. However, I don't necessarily think it's going to have a major impact within the immediate retail surrounding those malls. A lot of those are pretty infill neighborhoods and areas where you either can it's very limited on what you can bring in, such as in Century City, there's no real retail supporting that mall itself. And the other areas are pretty infill already and have a pretty good support for secondary retail. One of the hottest markets for investments in the Los Angeles submarket is the multifamily sector. And this is for good reason. We've seen average rent growth of almost 8% year over year for the last year. My concern, however, is in certain submarkets where the rents have grown dramatically, whether or not it can be sustainable. So we're actually seeing investors start looking at some secondary stronger markets such as Koreatown, the South Bay, the Valley, where people who are being displaced from the very high rents within the Santa Monica, Venice neighborhoods are now moving to. What's also of interest is that right now construction is outpacing the demand for rental properties within the downtown submarket. There's been a slew of new developments there, and we're actually seeing a lot more concessions being given to the tenants, new tenants moving in, and rent drops. So those are things to keep an eye on when you're looking for an investment, and so that you can really earmark the best property for you for your investment needs.